thumbnail to the stream because we're trying to do this a little bit makeshifty. But guys, if you're a replay viewer, always watch these videos from the beginning to the end. Like the video as well. We do love those like Unientes to get that freaking good old dopamine rush going. I'm just putting a thumbnail on the video. 2 seconds, guys. And yeah, so Will, my friend, how are you, my friend? Chris can't make it today from technical issues, but it's all good. But William, Lord Dumpu, the Lord of all trading, how are you, brother?
Are you there?
Yes, I am, sir. I am there. How are you, bro?
What's good?
Yeah, I just said, how are you going? Oh, Vikings coming back in.
Oh, I couldn't hear you. Are we live?
We are live, sire.
What's
We're live
good?
right now. Yeah, let's do it. So you can hear me. Everyone can hear me in the chat. Let's just see if it's all working. Fucking hell, these slow starts, eh? Yeah, so let's go. Showtime. We got Lord Snowy in the building. We've got Vikings actually trying to make it in right now, so it should be okay. Oh my god, yeah, don't speak. Everyone's freaking. I haven't added you to a scene yet. Anyway, guys, tell us in the chat if we're right. I'm gonna get straight into the analysis right now and just crack on, okay? So,
Let's get it.
wait, just if you guys mute. Fuck you now, guys. We're using new software, aren't we?
My program, if I mute it, dude, it mutes you as well. Oh.
Don't mute through the program. Just mute through your own.
No, that's what I'm doing. I'm doing that. If I mute the input, it mutes everything. That's the only way I can do it. Anyway, the show goes on. Just go for it.
The show goes on. Right, legend. So yeah, we're going to talk about Bitcoin. We'll do the short-term analysis. It's not really, okay, guys. Like I've said this a billion times over and over again. Trend is your friend. Obviously, we're not going to bet against these things just yet, but we do actually have a break of this trend line coming along here. Also, my mouse is on this tiny little tabletop, guys. I'm in Italy right now. I'm actually on holiday, but with the family. Add me on Instagram if you want to see more. So yeah, you've got these essentially higher lows coming into this, and it has been broken at this point right now. I'll zoom in a second. But like we said, guys, on this channel, we look at trend and trend is your friend, but these trend lines aren't anything to put too much weight on. It's not like the most significant thing you should be looking at. What you should really be looking at is these horizontal, flat, linear price levels and saying, look, if the price is above it, it's good. If the price is below, it's bad. Depending on whatever your bias is, it could be bad going down, could be good going up, could be bad going up, could be good going down. Essentially just where you're playing your levels, and the levels in the sand of you being able to create some sort of strategy in your mind saying, look, if we lose, say, for instance, the devil level, this is our next level of support. If you lose this area here, the probability is that Bitcoin's probably going to fall to lower prices. And guys, I just want to say something in this video as well. Bit of a slow start, but we're going to structure it slightly differently. So in the beginning of the video, I'm going to do the long-term, medium-term, and short-term analysis. So only analysis. Then Will's going to do his analysis, and then Viking will do his analysis as well. I don't know about today. He's not actually here today. And then what we're going to do, guys, is after the analysis part of it, we're going to look at indicators, and then we're going to do just setups. So the beginning is analyzing the market, and then we're going to do trade setups after we analyze, because analyzing and trading are two different things. We want to break that up a little bit more to make it so it's a little bit more rigid in your mind that these two parts of trading are different. So analyzing it is slightly different to trading it, but I'll put a few setups in there as well afterwards, okay? So yeah, the level in the sand, guys, the line in the sand here for the bulls to hold is 66666, the devil level. And also, guys, if you want to go into a little bit lower time frames, you would say this level of support here, the prior higher low, is important as well. Because as you go up the market, guys, the price rises. Obviously, the levels do change, the levels which you need to hold. I'm saying a significant level, guys, at the devil level. Consider we've had support on it multiple times. And if you want to look at the micro swing, this wick here, guys, would be important to hold as well. So if Bitcoin does fall below that, the probability the devil level comes in, then you're looking for a bounce trade. I'll go into the setups in a second. I'm just looking at this analysis, guys, from this time frame, and then I'll go into some lower time frames in a second. On another point as well, guys, this level here, it is a bounce trade. It is a bounce trade here, and it is a bounce trade here. And you can see, for instance, it says Big Daddy S. That means Big Daddy support. This is S here as well. So this is support. This is support. Really nothing in between, to be honest. And then you've got Big Daddy R, which is resistance. And you can see here, guys, it came into it 3 times. And all these levels here are significant resistance. So I would say if we come up to it again, probability to get more resistance. Do you then get a higher low? Do you then continue this ascending formation? Higher lows coming into it and continue. And actually, guys, the jury is still out. You know, there is a break of trend here, which is a shot across the bow. We're going to go into some other indicators in a second as well. I need to get my tabs up because I'm doing a slightly different stream here. But overall, guys, it's a shot across the bow, but it's not to go and say, now it's time to take a massive fucking huge short. The short I would actually take, guys, and this is a setup, I'll just quickly show you, okay? Let me zoom in a little bit for you, leggies. Get rid of that annoying dot on the screen, cannot be living with that. Draw a Fibonacci, guys. This is a very, very simple strategy that anyone can implement. Get a Fibonacci tool, guys, draw it to the low of that wick. I would say, actually, guys, if Bitcoin does rally into this zone here, between the 786 and the 618, there could be a head short position, guys, for potentially that being the lower high. If you invert that, guys, actually, then you begin to see that that would be a double bottom formation. But what you're looking for, if you invert it back, you take a hedged short position for maybe, potentially, I'm not saying it has to be, I'm saying potentially that could be the top, and then we can't create another higher high, and then actually this does squeeze down and we lose levels. Okay, so that's a good place to take a logical head short at those Fibonacci levels, and I will take that trade myself, and a lot of guys in my VIP group on this channel and in the VIP Discord we have, they will take that trade as well. Not because we think that this is now the top, just hedging against it maybe being the top. This game is not about saying, I think this is going to happen, so I'm going to bet all my money on it. It's about saying, look, here are the cards we've been dealt. Here's the risk we have to apply, and we have to play chess against the markets. Playing chess, essentially chess and poker combined. That is what trading is. You want to build that narrative into your head. We don't know what cards are going to come out. We don't try and predict what cards are going to come out. We just play with the cards we have. We have good risk management. We play chess against these motherfuckers, okay? So that's one trade, guys, there for you. That's a setup. In terms of analyzing the market as well, I'm just going to go back to the 4 hour just to make it simple for you guys. Yeah, I'll reiterate to one more point. This level is the line in the sand to hold. This level here, the prior wick, if we lose that, the probability of downside increases. As of right now, guys, you have to go with the trend. We are still making higher lows all the way up here. So I would say that this level, which has just been held as support, would be another buy for continuation upwards. And then if we do get above the prior high, guys, I'm not looking for any longs. Right now, there's no longs to be played. The last support was where the longs are at. If we do break above this, guys, decisively and come back into it, that's the only time I'll be looking to take another long, guys. I won't take a long here. I don't see any logical place where you can have a good risk to reward and a stop loss in this local area right now on the lower time frames. The only time I take a long, guys, is if we break above it and retest it. And if you miss it and it never retests it, fine. You wait for the next trade setup if you are day trading. If you want to go out to the medium term time frames, guys, I've been saying for a very long time, in terms of swing trading plays, I've been buying all the levels, all the relevant levels all the way up because we are still in a longer medium-term uptrend. There's nothing broken here. We're actually in a long-term uptrend with a consolidation channel down. And a lot of people were saying, oh, it's this, it's that. To be honest, guys, really, it's actually one of those, to be honest. It's actually like a falling wedge. But I would say it's a consolidation sideways, whatever you want to call it, with then another uptrend within a broader, longer-term uptrend. So you're not going to bet against this, guys, and go, oh, yeah, and I bet the fucking farm against it. It's still up until proven otherwise. And when you're looking for levels, guys, on higher time frames, the Big Daddy S, which I still have longs on a few exchanges, I can probably show you actually. This position I've got here, guys, is still open. Let me just get it up for you. So this long here is a swing position. This is still open. I haven't closed this, haven't touched it. My stop loss is in. I'm just letting that trade run. And that's what you're supposed to do as a swing trader. You want to let your winners win, and you want to cut your losers before they can really make you take a big L. Guys, long term I don't really need to go into, and you know, it's everyone can talk about fucking long term. We do have a very, very good year for Bitcoin. Obviously, we've rallied up from the lows, excessive amounts of people buying on ETFs, massive great news because the halving happened without any hiccups. So everything's looking good, guys, in terms of long term. You don't have to really talk about anything else. I think Bitcoin's going to have a great long term future with the halving, with new products to allow people to buy, and more institutions, more exchanges, more volume, increased volume, CMEs at all-time high volume now. I'll go into some other metrics in a second about in terms of volume data. But long term, guys, I don't think it's the end of the bull market. Even if we did come to 42K, which isn't off the cards, I still don't think it's the end of the bull market. I think 42K would hold between 48 and 42. And I've been saying on my channel for a while that there's nothing to go by now saying it will happen. But if it did happen and we did go down to 42K as the lowest place I think Bitcoin will go, that's the lowest I think it will go if we do have a pullback. That would actually be my best case scenario. I'd actually enjoy that more than it going up now. It will give the market time to sell off. All the strong hands that missed this boat, which wanted to get in, will then be able to buy at lower prices. When people who buy when things go down are stronger hands than people who buy when things go up. So when the market falls, you flush out all those weak hands. The strong hands then can either reaccumulate, buy more, or get in because they missed it. That creates a better base of support for potentially the spring to move us to higher prices. So 42K would actually be I'd actually enjoy that the most. But right as of now, you can't say that because we're still above 666666666, which is the devil level, and we have Big Daddy support down here is still intact. So, the probability as we go higher, my hunch is, looking at the break of trend, potentially if we do get the short, which I was saying, the Fibonacci retracement short from the high to this low, go back and watch if you just missed it. But there's a 786 short here. My hunch is if we do get resistance there and then we lose that wick, I actually would look at this and think potentially, this could actually look like something like that. And we all know what can happen there, guys. That's a descending formation. You've got triple. It's almost a triple or quadruple top here with lower highs coming up to it. That could end up being a top. And then if we lose the 666 level, guys, I do think it's a quick move to Big Daddy, which sounds fucking ridiculous, but the Big Daddy S. And then I think if we lose Big Daddy S, which is the price point of 61K, okay, between 61.1, I think 48. Actually, there is an area at 52 as well, but between 52 and 48, it holds up, and then it might actually go as low as 42. But I don't think Bitcoin will go any lower than 42. I think that will get held up, and then Bitcoin will continue the market upwards. I don't think the bull market is over through many, many factors. The issue is I can't flick through all my indicators right now because I'm on a different screen setup. I'll do it anyway. So let me just bring up the CBBI. Let's whip up all these things for you, leggies. So in terms of this, you guys already know this indicator I use. Well, essentially it's just a factual, objective numbers about what's going on with the ETFs and with all the old institutional grade Bitcoin bought. So we have ETFs, countries, public companies, private companies. Right now, 12.5% of all Bitcoin is held by institutions. That's good. That's strong hands. These are the strongest of hands, actually. It's very illiquid Bitcoin. CBBI, let's quickly whip it up for you, legends. So this is one of my long-term metrics. I won't bore you to death with this again and again and again, but I do this every single day when I look at the charts. I literally do a very boring rota of things. I literally look at probably about 20 things, and I just cycle them every single time I look at the charts to give me my context, my objective bias of what I think is the most probable thing to happen. And then lower term trading actually is more like just chart based, but this is more longer term. So the CBBI, another factor which I think that the Bitcoin bull market is not over is because the CBBI has not reached 100 yet. In every single market cycle, Bitcoin has at least hit 98. So this one was 98, this one was 100, and this one here was 98. And that was actually 98. And then we had a slightly higher price point. We had a bearish divergence on the CBI, which is actually, looking back at that, was a great indication. And then we're at 82. So I don't think the long-term bull market of Bitcoin is over. It doesn't mean this can't be the top, but I do think we're at least going to get some sort of exit move out in terms of a blow-off top. So I don't think the Bitcoin bull market is over just yet. The only way I'd change my bias on that, guys, is if we did actually lose around 40. So we came down to 42, rallied back up, made a massive lower high, and then began to move back down towards 42 with moving averages and OR indicators, etc. If you go on higher time frames, guys, you can actually see right now we're actually bang on the EMA ribbon, the trading bot as well. I'll go into that in a second, actually. And then the volume delta, we're probably looking at more green right now. Actually, you can see on the volume delta, the indicator, we have green bars underneath it, which is a good sign for upside moves on the low time frames. But I'm saying if you zoom out, guys, on the daily and you say to yourself, you get the trend collection indicator, which I use every single time. If the market, guys, is generally above this EMA ribbon, it means that it's good. We're uptrending, everything's fine. We are above the EMA ribbon. If you go on a weekly time scale as well, guys, it's even more powerful because then you can actually see what's happening on a the higher the time frame, the more significant it is. And you can see here, guys, at this moving average, we're actually a long way from it. But if the top is in, where will I change my bias and say, look, we're in a bear market? It will be, sorry about that. It will be 42K is here. If we nuke down to 42, we come back up, make a significant lower high. All this is a bit annoying, but you can get it. And then this moving average comes back round. And if we actually see resistance on that moving average and break 42, then it's, we're over, guys. Now we are in a bear market again. That's how I define it anyway in my book. And then in terms of the trading bot, I think we had one last successful trade. Let me just quickly check it for you. So we had a buy signal here and it got out here. So it's a slight win of probably about 1 or 2%. And now we do have a new buy signal, which is interesting actually, because there is probably a Lord Dumpu short to be made here. So if you get your Fibonacci tool out, if this wants to pop up any more, I will definitely take a short in this region. Just looking at this buy signal here. This is not confirmed yet because we're on the hour. But if this does go green and there's a buy signal on the MDX Trading Bot between here and here, if we get a push up into it, I will very likely take that short. If that green bar there stays, I'll take that short because we've had on the trading bot, guys, we've had a winning trade. usually the next couple of trades are not winners, okay? Because the win rate of the bot is only 38%. So now is actually a good time to look for a short. There's a few factors. It's not perfect. You can hedge against this position. The probability of you hedging against this, if this goes green, the probability of it going in your way if you short is 62%. And also, if you get into this area here, you then have the lower high potential as well. Okay, so there's a potential short coming up, guys. You can read all about this on my website, mdxalgo.com/trading-bot. You can use these signals pretty darn nicely to give yourself a good edge. And then let me bring up the old freaking goddamn long to short ratio. I haven't brought this up yet. I don't know, you guys can see this, yeah, probably. So long to short ratio, as of now, we are still a little bit net in the long side, which is another good factor, guys, for potentially a short playing out. But let me just quickly show you, that's the traders group, actually. Let me show you the trading bot. So in terms of that strategy, guys, you can see here that the trading bot only has a win rate of 38.7173%. Obviously, it's massively profitable, but it has a low win rate. That's why it's counterintuitive, and most people won't stick with it. It's because it has a low win rate, but a very high profitability rate. So anyone who tells you that win rate equals good trader, no, you can have a low win rate and still be very profitable. But if you read about the trading bot, guys, here, you can see that there is actually a strategy you can use to hedge against the positions that are winning signals after a winning trade. You go to mdxalgo.com/trading-bot to get more information. And that is pretty much it, legends. Interesting part we're at right now. I will be looking at that. I'll just reiterate it one more time before we go into Will. Guys, what you want to be looking for on these charts is 66666 is the line in the sand. If you're just looking at this market, you're not trading it, day trading it, just bear in mind that this level here is important. If you lose it, you see the price go below it, then the probability of more downside increases. And if we lose the Big Daddy S, then it's probably going down to 52K quite quickly, guys. We'll break all of this kind of stuff. But you can see with the indicators as well, we actually are above this right now. So we're kind of in the limbo right now. We're getting above the moving averages. We're in limbo with a short. Well, this is a buy signal, but it's a potential short if we go into the Fibonacci pocket. So you can see between the 618 and 786, if we pop in there, I will take a head short on that. That'll be, for me, a good trade setup. And then infinite market cap, I think we're at number 9 right now, Bitcoin. So that's pretty decent. And then commitment of traders, let me quickly bring it up. Okay, we'll do it nice and fast. We'll do everything long form content today, sire. So let's bring up Bitcoin and see what the boys on the Chicago Mercantile Exchange are doing. I think they are probably going to be agnostic and in the middle. Let's see if we get any changes. It's literally exactly the same, yeah. Agnostic in the middle, no change in short exposure. Interesting enough that they haven't been decreasing it. So actually, this is another sign that potentially the price could fall a little bit before the next expansion. And then, yeah, the asset managers have just been hodling for dear life. They don't change. They haven't changed for 3 years, these guys. Everyone thinks that, the hedge funds and the asset managers and the money fucking management firms and the family offices are any better than retail. No, they are not. They are not better than you. They don't have any extra data. They haven't got any extra edge. Asset managers who use the Chicago Mercantile Exchange are no better than any retail investor. Looking at the objective numbers of them just being long since all the way through. They've just been hodling for dear life. They're just hodling, essentially. The dealers are the guys who have been taking more risk directional plays. And right now they are still short. So that's pretty interesting as well. Now, let's bring in one of my oldest friends in this game. The old Lord Dumperuniente. How are you, sir? Let me bring in your charts, my friend. How's it going, dude?
Yeah, what's good, G? I'm good.
Your chart, my friend.
What do you say?
Your chart is up. Can you hear me? Is it good quality sound, guys? Tell me in the chat right now. Is the sound quality good?
It sounds good.
And guys, like the video, smash the likes up, all that kind of great stuff. We're going to be streaming for a while tonight. It's going to be a chill one.
All right, let's get into it. So, not to reiterate anything that you've really gone over, but I'm expecting 2 different scenarios here. It's basically this area here, the high of the swing on the 4 hour is really the inflection point on the chart. We've gained this currently, did a little test, didn't quite get there, but if we do lose this, really sweeping all the stops down to the 4 hour low of the swing down here and looking to hold the close of this. Anything lower than that, then you're expecting a lower high bounce and a nuke. And very much similar thing here. So all in all, I think that there's a pretty much 90% chance of us ending up coming back down here. But it just depends on which route we do to get there. So it's either coming down and then farming out some more structure. We make a third peak here, which is probably shortable and ends up actually going down to something like 63, 64K. Or it's coming up here doing this high now and then doing a similar thing where we carve out another pattern here and then we end up back there. But all in all, I think this support should be tested. I don't like this whole trend line setup and everything that people are showing at the moment. I think Bitcoin's probably going to end up coming back to test these levels down here. But yeah, that's basically my thoughts are the same as yours. As usual, we always have very similar setups. Coming over here onto the order books and liquidity, just looking at everything here. If you kind of have a look at how this is set up, you really have about 3 peaks here of volume on this chart. You have the top one here, you have the middle one, and the bottom one. And I think it's important to do your analysis first and then use indicators to back it up afterwards. And this is kind of why I go for the two scenarios here. So this is very much bang, in the middle of the range. If you were to pull a range from here to here, this is literally right in the middle. So it's really a terrible place to actually be taking trades. Therefore, you want to be looking for longs here and shorts here. So nothing's changed from really what you said. And it kind of backs it up by the VPR as VPVR.
Yeah, nice influence. This is why I love doing these order book stuff with you, bro. Because like I do traditional kind of price action on the charts, and then you bring up the order books, and when you see confluence like that, that's a nice little short right there.
It's going to be a really nice short. So when you're looking for these guys, one thing to actually add to this, which I think a lot of people should know, is that I think Max, the amount of times you and I used to get scammed by trying to short basically where we are right now. When Max and I first started trading, we were like, okay, cool. Here's the resistance. Obviously, we broke down from here. Let's short it when it comes up. But see, Bitcoin doesn't do that. Bitcoin is it's like a big liquidity monster, or at least the market makers are who sort of push price around. And so what you tend to see actually is it coming all the way up. We call it a stupefib in our group, where essentially if you pull from the high to the low of here, and then you go into this and you go on to Stu's fib, it will show you generally a bounce area of where price should come down to. And if you reverse it, you'll see, generally speaking, price is going to come somewhere up to here. And I love, once again, how this has confluence to everything we've just spoken about. Basically, that's the area you're looking for. And really what you want to do is you want to go down maybe, a couple of time frames, especially when the nuke is just a singular candle, and you want to see where the stops are, right? And guys, like, look, the people who got a free ride are here and here, okay? The big boys shorted here. This was the second best trade, or technically, actually, this is kind of the best trade because it has the safest kind of RR ratio. You've actually broken something. Here, you close the candle below support, so then you're expecting a retest that fails. Here is only really reserved for people who have huge orders. They're smashing in 5 or 10 mil, maybe more than that, and they can affect price. Anyone else who's shorting up here generally is gambling, unless you're using the daily or the weekly to find your trade. So essentially, all of that to say that this is the area of liquidity, and this is where they're looking to come take out. Same thing to the downside, guys. It's unlikely for it to stop somewhere like here. Everyone was going to be like, oh yeah, this is support. No. It'll come down and take these guys out most probably. So just always ask yourself who's getting fucked and where, and that's the best thing, because then
who's getting fucked and where. That sounds like a great porno, brother.
It does sound like it, but it's true, bro. Who's getting fucked and where, and you have to find exactly where the fucking's happening, and then you're going to find where the liquidity is. So that should explain it. Now, coming over to liquidations as well, we're very, very close to the pocket, which ends at around 70.6, or at least the major ones. But as you guys can see, look at this, another huge confluence. We have a massive liquidity gap between 72 and 71.3. So just like I said here, the liquidity ends right here. So I don't see price going much higher than this area here, unless it's a tiny, tiny little wick just to stop those guys out. So I think, once again, everything is pointing to shorting in this area. Should be a fairly decent trade for everyone to take. And then finally, coming over to the funding rates, I think a lot of people should be looking at this because it predicts tops so nicely. If you look at this on the 6 month, you can see here, generally speaking, we're looking okay. If we see this starting to get a little bit more frothy, such as the 31st of March, such as the 12th of March, or the 4th of March, that's when you want to worry. And if you look back in time at the chart and have a look at those areas, let me just turn all of this off. If you see here, so we have, first one is the 31st of March, right? And you come back, we have a look, and we can see, let's go back to it. Let me go on the daily so I can actually see it. There we go. So if you look back in March, right, we can see over here, the 31st of March is right there, a classic top, okay? And then if we look back at this other one, we're looking at the 14th of March, another perfect top. If you come back here, look at this, 14th of March. And the final one, which I know, I think it was the 3rd or the 4th, whatever it was, the 4th, yeah, which was right here. So we can see all of these are at key peaks that Bitcoin has had, and they show interest rates essentially. I mean, it's almost the same as interest rates. It's obviously funding rates, but I think of it the same as interest, really. It's like when interest rates are high, it squeezes the economy. It's expensive, debt's expensive, right? And so that causes people to be a little bit more careful. Various other things, and it's the same thing in Bitcoin, right? Up here you have very expensive. I mean, I actually did a calculation earlier with one of my students showing them if Bitcoin, I think at some point here Bitcoin had like 100% funding rate, yeah, somewhere around here, and 100% funding rate essentially equates to 0.3% every 8 hours, which equates to about 1% a day. So that means if you're holding $1 million position open, that means every month you're getting charged $300K to hold that position open, or $75K a week. Now that causes people to essentially think twice about their position being open, because it's one thing if you're holding a position and it's at a loss, but if you're then getting charged like 1% a day of whatever that position size is to hold it open, you're going to start thinking about it. You know, even if it's only 10K, you're getting charged $100 a day to hold that open. It's pretty expensive relative to the position. So I think a lot of people should look more at this. I won't harp on about it too much, but it's one of the best indicators for the market kind of being overheated. And right now we're pretty much in the clear. So we'll have to see what happens. You know, Bitcoin doesn't look bad by any means here. But if we start to see this heating up again, you could definitely see some issues here. So definitely some mixed signs across the board. You have some toppy looking signs in the price action, but the funding is still pretty much just chilling. And in the areas where it's blue,
Right.
generally we have.
Also, remember those guys who used to know, I can't remember, who just trade funding and they just go the other side of it, leave a position on, which is a
Oh,
big position.
the Niabia.
Yeah, New York as well. I don't know if you're on. I think Chris is here, but I don't think anyone can hear you because I haven't added you to the stage yet. But yo, it's like fucking the newer beer time was one part, but it was like nyong nyong pew pew. And then there was the another team I used to know who essentially I don't know how they do it. It's not my bread and butter in terms of trading, but essentially they're just trying to wait for range bound markets and then just go on the other side to get that funding rate and like whether it's going to be 100% or less. But if you can just basically put a position on and basically catch a range bound market without a trend, it doesn't go against you, bro, you can just milk in the funding rates on these crypto exchanges because they're so fucking erratic on either side. Sometimes you can be looking at like 1% per day on a 100K position. It's just mental kind of shit you can be putting away if you're doing millions of dollars of volume. Are we getting a nuke now? Let's have a look.
It's starting to dump a bit. One thing actually to explain to the chat as well, I was talking about this earlier, is whales do a really sneaky thing. So what they do is say that they have 100 mil, right? What they do is when it goes to 1% a day, what a whale will do is they'll long 100 mil, right? Whoa, let me just get that off.
Let me bring Chris in.
Can you see my screen still?
Yeah, I can see you. I'm just going to try.
So they'll long 100 mil, right? And what they'll do, this is on spot, okay? And then what they'll do is they'll come into perpetuals and they'll short 100 mil. I did that the wrong way around, but still, let's just accept that. So essentially, this is spot and this is leverage. And essentially, what happens is what's happening is longs are paying shorts, right? So what's happening is that 1% a day from their spot, they're obviously not getting charged because holding spot, you don't pay a fee. So basically, they're getting paid to their shorts, their leverage position. They're getting paid 1% a day of that amount to hold it open. And so technically, they're hedged, they're net neutral. So they're holding synthetic US dollars because they're short and they're long at the same time. But they're getting 1% of their position per day. So they're making $1 million a day if they have 100 million just by holding literally dollars, but holding it in long Bitcoin, short Bitcoin. So that's one thing that a lot of whales will do. It's called funding milking. And it's one of the ways that they'll do just to essentially even out the books and keep price in one place. But it's really interesting when you see that because it makes sense as to why a lot of these guys will just arbitrage basically. So yeah.
Yeah, it's
break it
Milk.
down Barney style a little bit.
Chris, they can hear you now. I've literally just added you, so you should be able to be here. But
Fantastic. Yeah. So funding rates every 8 hours. You're talking about perpetual derivatives are going to change the funding rates. So funding rates are what exchanges use to influence price between the futures price that they're offering against the market. So if, for example, if on Binance the price is higher than the spot price, they will add a positive funding rate, which incentivizes shorts. Simultaneously, if they want to incentivize longs, they will put in negative funding rates. And that's exactly how they get, market makers or liquidity providers to provide liquidity,
It's
which
just
is
balancing the books out. Bro,
exactly.
let's bring in some indicators, man. Let's go.
Yeah, fantastic. So basically, just to kind of talk about the liquidity side and the fact that we're sitting in a massive liquidity pocket. I mean, we had the major nuke on Friday. We have so much liquidity of high leverage above and below us. The weekend is getting more and more less volatile. So you're talking, on a weekend price action structure, we're doing about 0.7. Maybe just from Monday, we're doing about 1.5. So in the weekend, we're not even taking out the 50x leverage positions. We're just taking 100x leverage positions off because at 0.7% price movement on Bitcoin and other cryptocurrencies, for the most part, you're getting 100x leverage liquidations. 1.4% is what you get on 50x leverage liquidations. We're doing it on Monday, and more we're seeing that the volume and the volatility is extremely low. But what it's allowed to do now, since we've actually been up in this price action again, and now we're going on almost 3 months of being in a macro range, is that we're building up more liquidity since the big spike up that happened back on the 20th of May. So we do have short liquidity available, 72.8K. That is the gain to get us back above structure. If we get above like 71.8, gaining this local structure, the likelihood of us taking this lower leverage, larger positions potentially out is pretty high. But until then, you've got this beautiful liquidity pocket below you, about 67.4, 66.4, very, very high leverage liquidity mixed in with lower leverage liquidity. And this is always good to see. When you have this kind of like lower leverage liquidity structure built in, it's a great area for potentially a strong wick in that you want to see a higher low put in. Because just underneath it, you have a good liquidity gap. Now, when we have gaps in liquidity, what actually happens is there's no incentive for price to continue to the downside. So when there's no incentive to continue, the best bet you can do is actually create that lower time frame higher low, regain the structure that matters, and then you're actually wrecking the late shorts that are trying to catch the train in case you dump through all the structure. So I think honestly, like it still technically is upside trend, upside bullish until we start losing that 67.2K. That's the level from in my brain that sticks out as like, okay, as long as you're not failing this, we're going.
Around
What's that?
Around that devil
Yeah,
place. 666.
exactly.
How's the volume delta looking, brother?
Yeah, volume delta is looking pretty decent. We're actually getting quite a bit of step ins now off of like a very low Monday, of course.
Zoom in
So
on
I'll zoom in.
viewers. Zoom in on the volume delta because, guys, we've been using this indicator religiously at the moment because it's just really nice at just seeing when volume is beginning to inflow. So we're getting something nice there, perfect, and then the green under here. So you're saying volume in, very
Yeah.
nice.
Yeah, so we have bullish volume coming in. It still looks good, especially 4 hour higher time frame. It looks great to have a continuation. So until you start seeing some type of major reversals, especially on the perpetual contracts, because the majority of the market is perpetual. That's the majority of the liquidity. So whatever this is doing, the rest of the market generally follows. This looks good. Even locally, I'd like to see some better tests on structure above us. Getting back up to test the lows from the previous week. So Tuesday we had that nice move up into Wednesday morning. So we've created some higher low structure, some nice, I guess, range low. So if we think about this as a range, right? If that's the low of the range, that's the high of the range. We want to see some retests of this structure before we see some rejections that potentially break lower. So, coinciding with you guys' general idea for the market trend, I think it's all valid. But I also think that we have another catalyst that's going to be fireworks going on Wednesday. That is because guess what's happening on Wednesday? All this economic data.
You love economic data. The Viking loves a little bit of jobs report.
It's a volatility event. don't trade it. Don't be like, oh yeah, if this happens, I will go long. It's the same dumb shit that people do when they trade stocks. They look at earnings reports and be like, oh well, it's good earnings reports. I'm going to press the green button. Like that. No, that's not what that is there for. If the event that is already taken place, by the time you get it in mainstream news, it's not actionable data. Like it's designed to fuck you, because that's what it is. It's the
I
same
love
reason
when
why Kramer, you know, what
if it's designed to fuck them, we can then use the countering of the fucking to get us into a
counter fucking.
Yeah, who's getting fucked and where? Like, come on, let's go.
No, I mean it's like the same
Fucking-
thing as like the Kramer principle, right? Like if Kramer talks about a stock bullishly, like short the fuck out of it, or if he says something, oh Tesla's going to zero, and then okay, long it until you die. Like it's that simple, because you have to adopt a general inverse, possibility, because dumb money that 99% of the time will lose. They trade this economic data thinking they're making smart economic decisions when it's designed literally to fuck them. So,
just
yeah.
want to interject for 1 second, just sort of do a little thing. So, guys, we're going to do this more analysis here with the indicators and go through this data. Then we're going to do setups. So, we're just going to go through strictly setups where we think buying and selling is good spots. I already did some of them, but we'll go over that again. And then we'll do an AMA, guys. So, get your seatbelt on, because we're about to do those 3 things. And also, guys, like the video, hit the freaking goddamn subscribe button if you haven't already done so. And also check out our products and services at mdxalgo.com. Let's do this, baby.
Thank you, sir. So yeah, looking at Wednesday, we can go flat and sideways right now up until Wednesday, and it wouldn't change anything in the price action at all, because Wednesday, an hour before the New York Stock Exchange opens, we have all of this inflation data coming in. That's going to be the first kind of trigger to increase volatility. But the big one, like literally setting the tone for the entire summer, is happening 18:30 UTC. That's 2 o'clock in the afternoon Eastern US time, the FOMC interest rate decision. Like this is such a big event for 2 reasons. One, we're at 5.5%, and we've been there for a while. Like that's not a normal, typical thing, and it's been higher than it has been in decades, and it's sitting there. But the most important thing is other giant economic entities have already lowered interest rates. I think Japan has. Will, is that correct? You said Japan.
Yeah, Japan, as I
Canada.
said yesterday, yeah.
Yeah, exactly. Canada, we got the Eurozone, so Lagarde and the European Central Bank, they started lowering interest rates, but the forecast is still to hold a very, hawkish high interest rate, which is not benefiting the expansion of the market. If that were to change, if the forecast is wrong, and 9 out of 10 times I'm going to say the forecast for the Fed interest rate is correct. If that's wrong and they lower it, like hold on to your fucking seats, because it's going to get crazy. It's literally, it's literally going to say all the ETFs saying we're going to go higher.
I was saying this yesterday. I was like, look, like there's quite a lot of interesting charts out there, and a few studies actually which looked at this, which says like there's a lot of correlation between actually a stock market pullback when the Fed do begin to reduce interest rates. So it's going to be really interesting to see what happens. I don't think it will happen immediately, but I do think it's like you said, it's not a directional event; it's a volatility event. And what we need to do as traders is just have a logical stop loss to mitigate things that we don't know. We need to have an insurance policy, which is a stop loss. So when these things happen, guys, on Wednesday, don't in your head think, oh, because this data is going to come out, this is going to happen. Don't think like that. Just say, look, I'm going to go into it cautiously. I'm going to have a stop loss, and I'm going to have that stop loss as an insurance policy against what might happen. And if I do get in the right side of the trade, I'm covered and I have an insurance, essentially.
Exactly. And I think honestly, like them polling rates is the most bullish thing long term, because what it will force to do, it'll start breaking structure, because everyone who's dumb money, who most of the time loses money when they trade, they'll start pressing the green button right off the bat, instead of being like, okay, let's wait for price action to settle off of like effectively the most volatile thing that can happen to the markets. And realistically, I would want a major breakdown in structure, and we turn all of this like instant green fear, like greed, effectively into an extremely fearful system. And that's usually it might even take a couple of weeks to do that. And if that happens, if they actually pull interest rates, I'm probably with you guys in the fact that they will probably start printing out a fake bullish move where they'll come up and start doing stuff like this, and then they'll start breaking down really aggressive and really hard to start destroying the long liquidity that we have.
Those
So
longs.
yeah, and I think that's respective of everything. The other thing that, which is actually arguably the most likely thing, which is they actually keep the core inflation rate, or excuse me, the federal interest rate decision at 5.5, and that is not good because it's saying, well, we don't care about the rest of the world already lowering interest rates. We're going to remain hawkish, and it's still bearish for the price action. So effectively, either way you look at it, if they hold the same rates or lower the same rates, you're still looking for that initial failure just to start destroying that long liquidity that's building up and getting really, really over aggressive. And the only way to invalidate that's very simple. April Q2, like you establish price action above it, and then you start squeezing the upside until you effectively break out. That's it.
Lovely. All right, boys. Now we're going to jump into setups. I'm going to start it. It's only strictly setup. So no analyzing, no looking at macro data, no looking at other stuff. We're just going to go straight into the setups. And the guy actually did just do a message here saying that 5-minute scalping, okay, setups. I will probably stay on the hourly because on 5-minute scalping setups, I'll probably leave that for Will and Chris. I'll just stay on the hourly time frame and show you where the levels are. And to be honest, you could do this on the 5-minute if you just went on that time frame. But I'll say, guys, let's get into this. Let me bring up my charts. But this is just specifically setups. And the reason I want to do this, guys, because obviously we're all different types of traders. Me, Will, Viking, we have different ways of trading. And when you analyze the market, it's essentially just looking at the market and saying, what do I think is going to happen next in terms of analyzing? But trading is different. And the setup's part of it. You really don't need to actually analyze anything. To be a trader, you don't need to analyze or even know where the price is going to go. If you can just identify the relevant levels on the chart to buy or sell depending, that's how you can make money. You don't need anything else. All you need to do is be able to identify relevant levels. You don't need to analyze and say, oh, I think this and this might happen and my hunch is that. The hunch is sexy, and I give it to you guys because I want you guys to get a context of potentially the direction, but it's not actually what you need. You don't need that to make money at all. What you need to make money is understanding relevant levels. So first trade setup, guys, I will take, and I just said it. Let me just quickly check the trading bot actually to make sure that actually got, yeah, so we actually do have, this is going to confirm, and we've only got 15 minutes left. So this will confirm this sell here, which is a buy signal, obviously, okay? But in my book, guys, we had a winning trade coming into it, and the probability of this being a false signal is actually quite high. So if Bitcoin comes in between here and here, guys, in between the 618 and the 786, I would take a short position in this area for potentially coming back down. You can see actually this big blue zone here, guys, on the MDX auto charting tools indicator. You can see that big blue zone. That actually, if it came into that and tapped into that, that'd be a very nice place to ladder into a short. And potentially, guys, you could see some downside that price action. If you don't see some downside price action, you have your stop loss above these wicks. Make sure it's about 1 or 2% of your equity in your account. Then you invert it. You can see, guys, that would be the same trade as going the other way, wouldn't it? Okay, so it's like stops below the wick, you get into your long, move it up. With Bitcoin, guys, sometimes what might happen is they might try and squeeze it through, stop you out. So there might be a few different times where you have to re-enter and re-enter. Just make sure, guys, you don't just die on the hill consistently trying to re-enter if it's going against you. I usually give it 3 attempts. On the 3rd attempt, if it's still a losing trade, I don't go and try again, okay? So 3 attempts is my kind of, I think Chris and Will, you have a similar strategy where it's like 3 losing trades, just leave the desk. So that's one setup, guys, a short in here. Next trade setup for me is a long setup, and this will be if Bitcoin does come through, say it does something like this. Let me get rid of the trading bot. If Bitcoin pushes through here, say it comes back down, we get another higher low like that, and then Bitcoin breaks the all-time high. Well, this is almost the all-time high, I think nearly there. Maybe it is actually, yeah. And then this will be a trade where it comes back and retests it. Doesn't matter how far it goes. It might shoot off to the moon, it might shoot off to the stars. Actually, I don't think it is the all-time high just yet. This is just below all-time high. It shoots off to the stars, guys, and then it comes back. That there, again, is a trade, okay? So regardless of how far it goes, if it goes all the way here or here or here, whatever it is, if the price of Bitcoin goes above this level, where it's a resistance, I don't care. You could do this with your eyes closed. As long as Bitcoin goes above that price, then comes back to it, coming up and then back down, so it's buyers and then sellers coming in. If you see this price here, guys, I will buy it with my eyes closed just as a potential trade for continuation on logical resistance turning into support, which is called an SR trade. Another great setup. I'll take that trade right there. Another setup I will take, guys, on this chart for you. And I'm probably just going to do all the setups and then Will and Chris are going to be left with nothing. But the next trade, guys, I will take on this chart. You could take this wick trade here. I'll be a little bit skeptical of it. The next trade, guys, will be between where me and me and Will said, or me and Chris, I can't remember. So it's the devil level. All right, so 66666666666, the dev lev, and also $67,100 in here, where these wicks come in as well. There's a nice little bit of SR here, actually, you can see here as well. So, and you can see the auto charting tools indicator, MDX auto charting tools. Let me get it off for you. You can see that this blue zone down here, guys, this is a very nice area to take a long position. So if you say, imagine this scenario, imagine this all goes so well. It comes to the 618, it nukes all the way down. You're perfectly short from here. Then, guys, what I'll be doing is taking profit on that short, or regardless, I won't even take it off. I'll play a bounce trade here, guys. I think the probability of getting a trade which bounces off this region is very, very high. I would take it myself. I will take it myself if I'm not still on holiday. We'll see what the time frame is and where I am in the world. And that could result in potentially continuing forward, maybe going up, or it could continue with another lower high and breaking down. Regardless of those two scenarios, I'm still going to buy it because the probability of the bounce trade is what I'm interested in. And then taking profit on the way up, probably take 25%, and then leave the rest if it does actually break the auto high. And then, you know, this is the beauty of these bounce trades, guys. The probability is so high, but if you do get into the middle of it and you come to next prior SR, which will be that wick here, you're looking at a 3% move, bouncing back up. This is not like looking for a swing. This is not directional. You're not trying to say to yourself, I'm going to hold this forever. It's just scalping out on a bounce trade, which is one of the best ways to make money, in my opinion, in this market. For me anyway, in my personal way I trade, one of the best ways to make money, guys, is when markets are falling and falling back into prior support. They are the highest probability, highest win rate, highest profitability trades that I've ever been able to take in this whole game. It's better than when the market's going up because you don't have prior, a lot of time it's a blue sky breakout, you haven't got prior resistance. Also, when markets go up, they tend to chang up very, very slowly. So I'm saying when you come into a downwards moving market into support, that's some of the best trades you can make, okay? Next setup, guys, is the Big Daddy S level. So obviously, if you see Bitcoin fall into the Big Daddy S, and what will probably going to happen is now, guys, I'm going to say all these levels, and then Will's going to bring up the order books, and you're probably going to see loads of volume here, and all these levels, and that will be an added influence factor. The Big Daddy S level, guys, let's just say we come to the Fibonacci retracement, we bounce off. Let's say every trade goes perfectly. Bang, bang. Hopefully everything's working. Let's make sure everything's going good. Getting loads of messages, people screaming at me saying there's no volume or sound. So yeah, we get the perfect scenario. We go to the 786 retracement and it nukes. We're short. We then get the long at the fucking dev level. It pumps, and then we take profit on our fucking level of resistance, which used to be support, and then it nukes all the way back down, and then we get a nice little buy trade there. Short here all the way down. You get your long in, and then we're looking for another long. That could be some pretty nice fucking setups, and I'll take every single one of those setups. Not saying that's going to happen, guys. That's not a prediction to say Bitcoin's going to do that. I'm just saying that if that did happen, every trade which we would have placed would have been a successful one, except actually the one which we never got into, which will be the break of the upside. So there's no trade right now, by the way, guys, just to reiterate that point. A break. So if it goes like this, back in, and then we break above this area of resistance, and then back into that as support, bang. Those are my trade setups as well. If you want to go into lower time frames, you can actually just get all these same fractals on lower time frames and do that exact same thing on a lower time frame, on a 1 minute, a 5 minute. Just look for the same objective setups or objective scenarios towards a setup, which is above resistance into support, hitting resistance down into support, and just playing those SR levels, playing chess against the market legends. It's chess and poker combined. It's getting a bit dark in here, I think, actually. Like the fucking sun's going down. I don't know if you boys can still see me. Let's bring Will into it, my friend. What's going on, bro? What do you think about the market? And give us your setups, my guy.
Well, you've literally just done exactly my setups, which I prepped before the stream. But yeah, it's literally either deviate the high or the Lord Dumpu short, or deviate the low and the inverted Lord Dumpu. So for me, I'm not worrying about all the stuff below it, because right now this is support, right? We're not going to think about what happens until we breach that. But I would say priority is obviously longs until that's breached. And I would say if you get this first and it comes up here, like just because this is here doesn't mean we have to do this one first. It could do this and then this, right? But either way, prioritize getting your long. And then I would say hedge your long off with your short, and then just hold both of them and find the winner, because whichever move we get from here is probably going to be relatively expansive. Unless, of course, it deviates. But I would say specifically to the downside, I think to the upside, it's way more likely to do a deviation and then nuke. To the downside, if we do break this level, it's way, way, way more likely because we've just have this massive, like, generally speaking, if you see a trend line that's like as big as this, when this breaks, it's normally a serious flush, right? And this is asking for some sort of like 5-10K candle that just does that. Just because there's stop losses all the way down. And we know, guys, anything like this ends up being like dominoes. Each stop loss knocks price to the next stop loss, and it just keeps going. The liquidations just keep popping. So yeah, I'm really not going to reiterate that anymore.
Like objectively, there are more longs as well because on the
objectively, there's fuckloads more longs. And I really do think there's some fuckery to be had. Like, sure, we could just sail off to all-time highs, but honestly, let me delete all these. Similar to what you just said a second ago, I feel like it would be a lot better if Bitcoin did actually just do this, crash to here, come back, test this, then do a lower high here and nuke all the way down to here. I feel like that would just take out so much of the like high leverage. Well, not just high leverage, but just weak hands. And I think you made a really good point earlier, which people forget, is that as the higher we go, the more people are FOMO and weak hands. Like if they're buying up here, it means they're shit at trading, unless obviously you're like us and we're just trading the levels. But anyone like buying here and hodling is generally a terrible trader. And that means they're going to sell as it comes down. They buy the top, they sell the bottom, right? So giving it over to people like us who just have strong hands, we have no lettuce hands, guys. We're not going to be fucking nuking at the lows.
We have testosterone, legends.
We have testosterone, yeah. We ain't got lettuce hands. So at the end of the day, right, people who are likely to sell at these levels are going to get bought up by whales, people like us, people who have strong hands. And that's just healthy for the market. It means we can actually push off without having these small little, like, everyone gets scared here and then it nukes more. And you know what I mean? Like, generally speaking, you just want strong hands to be holding positions and you want weak hands to come in and FOMO up here. And then we can nuke them off again and then continue. And, you know.
Yeah, it's my ideal scenario would be this. But yeah, we're getting back into analyzing. But this is my ideal scenario just because I said, yeah, like, you know, people who buy when it goes up are usually weaker hands than people who buy when it goes down. Because essentially,
if you didn't do the exact fucking trades as me, I wouldn't have had to, MDX.
I mean, let's be honest. It's the same exact trades as Lord Snowy.
Lord Snowy is your name now. Hello, Lord Snowy. No, but I understand we're going to have the same setups because me and you, quite similar. But it's good to have the confluence of the two people. And also, if you bring up the order book, just have a quick look at the order books, bro, and just see what's going on.
Sure. Back to analyzing we go.
Just see this. Just see if those the pockets of volume are coming in at those levels. Because I think we'll probably see quite a nice little.
They certainly do. Like, look, these are all the levels, right? Look, we have the big boy level we just spoke about here, which is essentially 42. It's a little bit lower than that. I drew it wrong, but right here, essentially 42,500. That's the big volume zone. We have here 52, which I think is a little bit of a meme now because we've kind of held it here. I mean, that's really this area. But because of all these stop losses, if we do start farming out structure here, I don't think we'll just have a small stop off here. And it's more likely that if we do get some sort of, nuke and it comes down here, it's more likely this just provides the quick test to come back and retest this bearishly. And then you get that larger nuke. And then this candle's the one where everyone sells. So that's kind of what I see from this. So generally,
a little pocket in there as well. The devlev,
yeah, exactly. So I mean, the thing is, guys, it's very clear. 63 matters, 67 matters, 52 matters, and 42 matters. So that's basically.
You have absolutely done the cherry on the cake for me. Now I'm going to go 100x leverage on all those levels because there's so much confluence between our analysis. Now, Viking, my guy, what have you got for us? Just strictly setups. What you got for us?
Yeah, so strictly setups. I was just reading the comments. Some guy was asking for a 5-minute thing. The first thing I'm going to kind of preface this with is the 5-minute means absolutely fuck all. It's a made-up time frame. It doesn't actually affect price, at least in my understanding. If you're going to look at time frames that are very low, look at the 3-minute or the 1 minute. I like the 3-minute myself because you can actually see reversals as the candles close and see a bit of the higher time frame stuff. That being said, we're looking at the 5-minute because the guy was asking for it. You're seeing the local failure here, mid-range of the current structure you're putting in. So this is a mid-range failure on the 5-minute. to come back down to the lows of the current structure. The failure on the 5-minute that matters is back at the weekly open. Weekly open, plot your fucking high time frame levels. Weekly open, monthly open. It's not hard. We do ours automatically with auto charting, but failures or gains at the weekly open always lead to expansions. So it's that simple. That's the closest major high time frame level that matters. If we fail that, we need to go back deeper into the liquidity. Until that happens, that's exactly what we expect. The upside move's done for the most part now. You're sideways until you actually start regaining into the local mid-range section. It's a small range. It's not really worth trading. It's only about a $300 range, so wouldn't recommend it. Going into, but yeah, that's the 5-minute because somebody was asking for it. And I'm trying to be nice.
Don't want to cut you off, brother, but just show everybody the strategy you have on your screen on the 3-minute, because this is a really, really good strategy, guys, to use with this. It's reversal plays and pivot plays using the 2 bands and then your oscillators. You do this in a group and it's good.
Yeah. So my big thing that I like to look at when I trade low time frames, like scalping, first of all, it's two major rules, which is 0.7, 0.14, right? That means that if price moves 0.7%, I'm taking profit. If price moves, not 0.14, 1.4, there we go, 1.4%, I'm taking another profit target. Aggressive. Why? Because I'm on low time frames. I'm scalping like a degen, right? But looking at the actual stuff that we look for trading, we're basing off of structure. We have bullish trend change. We've got upside movement on the on-chain metric bundle. This is currently showing retail stablecoin demand. Effectively, we've been able to quantify how retail traders swap from holding cryptocurrency versus stablecoins. So if they are exiting into stablecoins, the retail stablecoin demand is going down because it's becoming more green. If they're getting more allocated, they're effectively getting more exposure. So as exposure to cryptocurrency gets higher, the likelihood of a retracement becomes even more high. So that's the retracement we look for. So effectively it becomes, oh, we're going up, we're in an upside trend, we've got the trade, the base off from support, we got some TPs popping. These are great places to take profit. I mean, God, 3 in a row. I mean, here's your sign, right? We hit the top of the bands. We use a combination bands. It basically algorithmically takes the 3 major band stuff like Don Chan and Bollinger Bands, puts them together so you can actually action them, right? Looking for failures. We're seeing trend change. We're seeing toppy structure. It's all about confluence, right? So you effectively have a checklist. These 3 things saying, hey, we're looking freaking toppy. We're seeing volume outflows as well, the little blue line coming back down. We're actually seeing divergence, right? So we're seeing that divergence of price against the other metrics. I mean, just offhand, it's 6 or 7 different things saying, hey, we're probably going to fail if we fail this local structure. Like, that's literally it. So if you fail the really local failure, you're effectively, we're saying, okay, all of the metrics are saying the same thing. We're diverging. We're at the top points. We're at a take profit point. We're seeing reversal. We're at trend change. All these things in a row to come back to the downside, back to find a support level. So that's a low time frame scalping strategy that is effective. It's repeatable.
Honestly, StuTube uses it. I see you using it all the time. I have it on my indicators, on my charts, and like, you can literally, if you guys like lower time frames, you can set up about 3 or 4 different things, and you just wait until those things line up. You take the trade, and it's like magic. It's literally magic. The pivot plays, because a lot of guys like this type of trading strategy. They come into trading, they want it to be action at the beginning. They want to get into trades so they can actually learn how to trade. And the best way to do that is to play pivot plays and do like reversal strategies, because it's like it pops up into resistance above all the bands, back in a little bit, and you just go, whoa, in and out, in and out. And you get your like timing, limit orders, stop losses. You learn everything really quickly. So I'd recommend getting the indicators legends and just doing that. And you know where to go, mdxalgo.com.
That also answers Daniel's question. What software do you use? It's our own proprietary software. We make it. It's at mdxalgo.com. So head over there. You can get our entire VIP group, as well as all of the indicators you've seen today, all in one package. And then also to answer Charles's question for the British guy is the best retail trader infrastructure with lowest fees. Honestly, if you want lowest fees, I would say Mexi is probably the lowest fees. If not, you're looking for Bybit.
Yeah, well, they're all the same now, actually. So it depends on market fee. The one CoinW is the most expensive now of 0.04 Maker, but everyone's the same now. They've all pushed it down to 0.02 Maker. The only place you can get different fees is with Taker. So sometimes they're more cheap on the Taker side, but literally all exchanges have literally just leveled out at 0.02 on Maker fees, and that's what most of you guys are going to be paying.
Yeah, but Mexi is 0 Maker and 0.01 Taker, so it's actually double as cheap.
Yeah, but it's only for a limited amount of time though. They raise it after a little bit if on your account.
Depending on your volume. If you kick your volume up, they don't do it, but yeah, they do.
Question: I love the ways for the Brits. Retail trader infrastructure with low. Oh yeah, that's just that. Literally that question.
But yeah, so I've got another setup for a different coin, actually, something that we've all talked about before. Trio. This is the Ordinals bot stuff. This is the platform that they use to launch runes, all the BRC20 big things that are happening. I think that this thing is actually entering its accumulation phase, or it's in its accumulation phase right now. So, as far as I'm concerned, this is easily a coin that you can almost guarantee it's going to at least the initial pump high listing on Gate, so $7, likely at least 9, probably going to make new expansion highs. It still looks good. It's trading actually very nice wave wise. The low that it put in, if I just turn all this stuff off, we look at it price action wise, we made a crazy wild low, complete failure of level based off of like everything else that was happening. 14th of May. Will talked about it earlier about that was the major flush out point. And what do we do after it? Well, we created a V bottom, right? That initial pump actually created new support where there are buyers at. So this looks like something that's going to round out higher time frame. It looks like something that's going to have a major continuation, in my mind. At least even the local one. I just posted a very local trade on this thing. This is a 4-to-1 risk reward, right? So when you're doing your risk reward calculations, you always want to like focus on something that's 3-to-1, 4-to-1, something that's giving you a high return for what you're risking. And what that effectively means is you can get stopped out more times than you can lose this trade more times than you win it and still make profit. And that's a really weird concept for a lot of people to understand, which is the number of times you win, like your win percentage, means absolutely fucking nothing because it's all about your profit factor against your drawdown. Like you could win only 30% of your trades, but still have a giant profit factor, right?
Of course.
So get the win rate. Get the.
The easiest way to think about it is just take your whatever the risk to reward ratio is and think about it in dollars. So each time you're risking $1 to make $4. So technically, if you win the trade, you get $4 back. So you have $5 in total. So you can then lose that dollar again, a total of 4 more times, and then win another trade, and suddenly you're back to $5. So this is why we say you can literally lose more trades than you win and still be profitable as long as you keep your ratio.
Exactly.
Win rate is completely irrelevant. Like real traders and professional traders like ourselves, we don't give a fuck about win rate. All we care about is P&L and profitability, because you could have a fucking 99% win rate strategy, but then you lose everything on the 1%. So like it doesn't mean anything. It just needs to be like consistent and long term and have lots of data and back test it. And who cares about the fucking win rate? You just have to wait until the winning trades happen. And swing trading, you have to have a low win rate because like the swing doesn't happen as much as the range anyway. So like, it's like everyone gets so fucking happy like in swing markets and they think it's going to be swing forever. But like, look what just happened on Bitcoin recently. It's just completely dead flat for literally such a fucking long time. It's so much more sideways than it is swinging. Generally, markets in general fucking has a massive upside. Anything else you want to add, Chris, before we jump into the next segment?
Yeah, no. So the big thing here is very simple. Last little comments, very simple. If you're not planning your trades out before you action them, your lose rate and your profitability is going to go down. When it comes to trading, especially scalping, make sure you're journaling no matter what the trade size is. If you're not journaling your trades, you're not putting the work in, you're going to be less profitable, and most likely you're going to be losing money. The hardest thing, and that's the hardest thing, which is it's very easy to be lazy when you're trading, because it's like, oh well, I see that setup, I'm going to take the green button and blah blah blah. Journal it. Take screenshots, write notes, understand your profit targets, be religious about it. Like your stop loss, when you put it in, when you plan your trade, that does not move. You know, I'm planning this trade This is the first profit target. This is the number one. I'm taking 20-25% off. This is not me closing the trade. Like I'm still expecting it to go to like $8, $9, $10, right? But I'm ensuring that if I plan my trade in my first profit target and I have a risk reward of 4 or higher, the likelihood of me losing money long term goes down extremely low.
And so, if you can, actually buddy up. So obviously I'm head of mentoring for our company, and I teach around 18 students. And recently a couple of people were struggling, and I said to them, tell you what, send me every single trade that you're going to take, and just send me the setup, show me, right where you're going to enter, your profit targets and everything. And every single person who's doing that has been like, holy shit, I'm only taking good trades now because I have to send them to you and I don't want to send you bullshit. It's like, if you're struggling and you're eating shit, you can send your friend a photo of the food you're going to take every single meal. I know people buddy up and do that. And what it does is it's just accountability, right? At the end of the day, if you have to show someone what you're doing, you're way less likely to fuck up than if you're doing it on your own. And the results speak for themselves. Everyone who's doing that is doing incredible. And I'll be honest, sometimes I'm busy and I can't even look at their trade. I'll look at it later. But it doesn't even matter. The fact that they're having to send it to me proves everything and does everything, because they have to then hold themselves accountable. And if I reply and say, hey, this is bullshit, like, you shouldn't enter there, what are you doing? They know that. They know that I'm going to be honest. They know I'm going to say that. So if you can buddy up with someone who's decent, find 2 people in our group. Sorry?
The Lord Dumpu, the wrath they're so scared of the wrath from the Lord Dumpu, they're quivering and they're like, I have to actually make the trade good, or his Lord Dumpu will dump on me.
Yeah, they'll get fucking nuked. Don't send me any shitty trades.
Right, boys, let's do an AMA. Right, let's answer some questions. Guys, so everyone in the chat, ask as many questions as you want. We'll do this for about 20 minutes, maybe 25 minutes, whatever, if we get some good questions. But guys, go to the chat, ask as many questions as you want. Bitcoin is actually dumping right now from that bicycle I said on the MDX Algo trading bot, and it's nuking, but essentially a nice little counter reversal trade there on the hedging. But ask us questions in the chat, veggies. And a few people are saying, like, you guys, if you're not getting onto exchanges in like the US and the UK, just use a VPN. Like, look in the chat. Like, VPNs are a great way to get past all that kind of stuff. If you like, the thing is about crypto trading is governments just essentially just still don't really get crypto. They just look at it as like some illegal fucking crazy people gambling, and that's kind of probably some truth to it. But it's like, at the end of the day, your VPNs aren't illegal, so you should use them to VPNs are a way to mitigate, surveillance of your traffic which you go on the internet. Okay, so just use that as much as you can. Like, it's a massive fucking great thing we have VPNs, and they weren't made illegal or some bullshit.
They'll try to.
Will BTC go to 100K? Eventually, yes. Yeah. Obviously, the timing is something which we will have to wait for, but eventually it will do, because soon $10,000 won't even buy you a fucking coffee, looking at the rate of creation of US dollars. So yeah, I think Bitcoin will. I think it's guaranteed, if the fundamentals stay the same, for it to go to $100,000 at some point in the future, and I do think it will do it this market cycle. I think we all agree on this panel that it will go to 100K this market cycle quite high.
At least. Right? At least.
Yeah. Do you think the same, Lord Dumpu?
Nah, we're going to 0, bro.
Okay. Okay, Peter Schiff. No, but people also don't realize supply and demand. Like general, like simple macroeconomics also play a part. And something that people don't fully understand is that at least 6 million Bitcoin have been lost, gone. Some people say upwards of 8 million. But you're talking about a supply of 21 million, and almost a third is potentially gone. So yeah, just say something like grossly undervalued. I mean, come on.
Yeah, losing it's hilarious, but like, it'll come back one day when we get quantum. So invert the 1 hour on BTC and tell me it's not. Invert the 1 hour on BTC and tell me it's not. Tell me it's not what, sire? Not sure what you mean there, mate. Next question. Can you guess on entry on my short? Can I guess the entry on your short? I'll hazard a guess. 69,999. Nah, it can't be that. Yes, it can be that. Yeah, 69999. 69, Mr. Zeus. I am Zeus Crypto. I bet you're on the 69ers, aren't you, sir?
70.1. If he's taking it really scalp local, he took it at 70.1K. Otherwise, he's bullshit.
I obviously am biased on the DEX side because I've got alpha.exchange. So if you just type in alpha.exchange, you find my DEX. We're actually doing it's probably going to take another 2 weeks, but we've got a big update coming and we have a degen button built into the DEX. Okay, so it's going to be absolutely fucking hilarious. But alpha.exchange is my DEX. And then I use for normal trading Bingx. And the links are below, legends. So what we got here, connected to, what is this exchange? I connected to Mauritius. Is that one of those fucking Solana exchanges?
I think he's saying Mauritius, as in the country.
Mauritius, yeah. Yeah, okay. I've looked at Mauritius as like a tax haven. Like it's pretty decent. You can set up LLCs and all that stuff there.
What's the fucking Solana exchange like that?
It's a good holiday as well, Mauritius.
Really?
Yeah, it's vibes.
Guys, Margex have messaged me so many fucking times. It's a complete scam. All right, don't use Margex. It's literally the shittest exchange I've ever seen in my life. It's literally like, guys, I'm not even going to go into it. Just don't use it. I've seen it. The books are a joke. Like if you're just gonna get wicked out on every fucking thing. Did you buy? Why, bruv? Everyone's just coming into the chat with fucking jams.
Speaking of scams, Chris, do you remember those guys that tried to pitch us that we were on a call with these guys and they were like, yeah, basically we have this like exchange, and they went through this whole pitch and we were like, okay, but wait, where's the live trading? And they're like, oh yeah, there is.
Yeah, the Israeli guys.
They're like, there's no live trading. And we're like, what?
No. Yeah, exactly. They were a B-book, but they weren't actually a B-book. They were internal trading. So all of the trades were fake. So, oh yeah, we're going to give you, just sign up and you get 100K on an internal system. And you don't actually keep anything. Yeah, it was the biggest scam.
They're just betting on traders basically losing 90% of the time, so they just keep their money. That's fucking ridiculous.
Absolutely absurd. It's almost the audacity just to like do it as well is hilarious in crypto. They just do these things which are so obviously scams and people get wrecked. All right, next question.
I remember the look that we had with each other when he's like, oh no, we don't actually action the trades. We just do it internally on our system. We both looked at each other. I'm like, what?
Yeah, fucked up.
This guy asked about the trading bot. So, dude, the minimum recommended is I think $10, and then you can do up to 10,000. Okay, so it's on Bingx, and you can use the trading bot that way.
But let's be honest, like the minimum recommended is probably like 1 or 2K. Otherwise, everything's going to be very slow for you. So I would say,
I'm not recommending $10. I'm just saying the minimum you can do is 10, and then up to 10,000. But yeah, if you do $10, it's just essentially depending on what. Even if you live in like the most rotted out third world country and it costs you 10 cents a meal, it's still probably not worth it. So do a little bit more than $10 because it takes years for it to make the gains using the trading bot. Anyway, anyone used OKX? Do they have OKX? Actually, have a really, really big exchange, guys. Like they're actually massive.
They're good.
I would recommend it myself just because of the Asia market, but there's a big exchange. They have lots of assets, stuff like that. It's not a bad exchange, but they're similar to the BitMEX of Asia in terms of what they do with their customers. But it's whatever. They're a big exchange.
Rory, how would you trade a token release on an exchange? You don't. You either have the token beforehand and you sell it, or you wait until it pumps and then retraces, and then you buy the retrace. Like 90% of them, like look at any altcoin chart and look at the beginning of it. Whatever pump it is, it almost always retraces 90 to 95%. You can look at pretty much any token. I'd say there's, I don't know, what would you guys say? It's probably like a 95% chance it's going to do that. So like the beginning of token stuff, like be careful because you click buttons and sometimes the exchange lags. I've done it before and you end up buying it or selling it at like something stupid, like 80% up or down from where it is. Simply just do not trade when things come on unless you already have the token, you want to sell some.
Yeah. I mean, that's 100% the case. If you already hold the token, the object of it listing on an exchange is you taking profit.
It's literally it's literally a liquidity event, guys. Like, think about it.
Exactly.
When a company goes on the New York Stock Exchange, right? That normally takes 7 years, and the likelihood, I think it's only like 0.01% of companies ever get on there. I think it's even less. And it takes them 7 years to get there, and then they can actually sell their shares and make some money from the fucking company. In crypto, it's the same thing. Whatever exchange you get on, the whole team's like, sick, we actually get to cash out now. So the team
you need to do the due diligence and look at the team and see if they're on the same vesting schedule as yourself or whatever, and like how much is going to get dropped, because a lot of the time it's going to get a big fucking red candle. It's exactly right. It's just an exit liquidity moment for the fucking projects.
The team,
a lot of the tokens have equity. I mean, like, there's people who are VCs, you know, influencers are getting paid to shill stuff. Like, the idea of a token listing is a liquidity event and a potential exit for people who already have the token. It's not for buying; it is for taking profit. That's it.
Right. Let's do
whatever happens after the fact. Like, look at Trio. We looked at that before. Same exact thing. Big exit event. The idea now is you accumulate until you're looking for a bigger run.
Let's do about 10 more minutes, Legends. I've got to actually go in 10 minutes.
Yeah,
I got to go in 10 minutes. Okay, so yeah, this question here, like, I didn't say anything when Will recommended it, but yeah, personally, I don't recommend MXC just because of the big internal fight I had with them when I did that tweet about them acting as a broker and not acting as an exchange, essentially. The issue is with MXC is that because they list so many tokens, that the liquidity providers are the ones which are completely the other side of the order book. So in some cases, there's been individuals who've made money. They've made the money from taking money from market makers who work for MXC. So essentially that means they're essentially a broker, and brokers don't match trades. Brokers are actually holding the stock of they're holding the stock of the project tokens, whatever it is. Then they're buying and selling with customers, making money on fees. But if they make the liquidity on the exchange and they lose a trade, a big trade, for instance, they're not going to give you the money. And then we saw loads of people's accounts getting traded, closed down on MEXC. So if you do use MEXC, 99% you'll be fine. But just know that there could be an issue. And if you make a lot of money on a small altcoin, if you trade Bitcoin, you're going to be fine. Small altcoin, you might not be, because there's been a lot of cases, maybe actually hundreds of cases. It's stopped now because maybe they've changed their way of doing it. Because I did a tweet which got like 500,000 views, and they messaged me like hundreds of times with like a whole lot of threats as well. So like, it's just a bit dodgy, the whole thing. But I wouldn't recommend it, guys. Use a Bybit, use a Bingx. Those are the ones that I promote on this exchange. On this, sorry, I got to go now. Actually, these are the exchanges that I promote because I use them myself, and that means that I actually have put my money where my mouth is, and I don't just shill shit I don't use. So it's Bingx or Bybit. Those are the ones I promote. Actually, Femex as well to a degree, but the links are in the description. Okay. So a few more questions. GM to bears only. Max, are you celebrating Pride Month? No. What a question. No. Also, Pride Month. Like, why is it a whole fucking month? Like, it's just absurd.
Max, are you celebrating Pride Month? Yeah, that's why he's in Italy. He was like, "Fuck it, guys. I'm just feeling a bit quirky. I'm just gonna go celebrate."
I'm going to Italy. I'm gonna go get a mustache ride. There you go.
I'm gonna eat some vegan cheese and celebrate Pride Month. Sounds lit.
Anyway, out here with these Italians, these dodgy Italians in the old Pride Month. Anyway, are you guys all back? What are we gonna go back out, or shall I carry on? Shall I carry on, or are we gonna go out? Oh, okay, cool. All right, legends. I'm gonna wrap it up. I've got to go for a meal, and I'm gonna go celebrate Pride Month in a restaurant. Any more questions? Inverted BTC. We already did that one. Is your bot on Bingx called MDX? Yes, it is. Just type in MDX on Bingx on the copy trading. You need to use my referral link to get access. But I think, guys, that was a great stream. Really good shit. We did good price analysis. Then we did the setups, everything there. So I think we'll keep it nice and short and brief. 1 hour and 20 minutes. I think that's a good way to wrap it up, leggies. One more question here, just to do it. BTC is the greatest asset known to mankind. Never forget that. It's going to melt faces this week with the Fed rate decision. You know what? We'll end on that, because I do think if we get let's see what happens in the next 6 months. But I do think Bitcoin's going to do something that shock the world. Do you guys want to add anything to the end of that?
Dump it.
Is it new?
Yeah. Last little thing is, like, a lot of people shouldn't be trading who are trading, and a lot of people who want to trade shouldn't trade. Be very understandable of like your mentality and who you are as a person and how you react to emotions when it comes to trading. The easiest way to make money long term, very simply, is to DCA, which means dollar cost average. Buy a little Bitcoin every month, and you'll be happy in 15, 20 years.
The easiest way to make money long term is to go be a wage clerk and work for someone. And if you're not built for Bitcoin, you're probably going to
Right,
it.
I'll tell you what. The best way to make money long term is by buying Bitcoin, and the best way to get poor long term is by celebrating Pride Month. We'll leave it there. I'll see you guys.
Peace.